You are listening to chartingwealth.com for Friday the 20th of July, 2018. The book is available. Follow the show notes. You'll find the links to how to purchase the book, Charting Your Way to Wealth, if you really want to have an in-depth understanding of what it is we do here at chartingwealth.com every day, bringing you the breakdown on the charts as we see them on two big stock indexes, the S&P 500, the Nasdaq 100, and also on 20-year bonds and gold. This will help you understand what we do, why we do it, how we do it, and also we offer some special training and gifts to the folks that purchase the book. We just got finished releasing our 2-hour chart training, that is your short chart training, and we will be releasing here very soon for folks who purchased the book another training on Bitcoin with our special Bitcoin chart and how we chart Bitcoin and what we see going on with it in the marketplace. So buy the book in order to get that material. Also, we're asking you to please email us and let us know what else we can do for you. If there's certain stocks you'd like us to review, certain trainings you'd like us to go over more, be happy to do that and help you. Maybe do like a once a week little special training that we might do on Periscope or something like that, or just post it here and email it out to everybody. Anyway, if you've not signed up and aren't subscribing already to Charting Wealth, our daily market reviews, you need to do that. You can do that easily. Just go into chartingwealth.com, put in your name, email address, get it out to you. Let's jump into these charts. We see stocks are down for the day. Both the S&P 500 and the Nasdaq 100 is represented by QQQ. TLT, that's 20-year bonds up, gold down. Let's jump first on the weekly chart, as we always do, into the S&P 500. So far, we have a weekly up candle, not as strong as the prior weeks, but it's still got Friday to go. This is where we are at the end of the day on Thursday as we go into Friday the 20th. We see the derivative oscillators still up a little bit for the week. Price percent oscillator heading up, green open box candle, price movement above the weekly and the 2-day trend line. We go from the weekly to the 2-day, and we can see that again, price movement still going up, not at the strong pace it had been. In fact, since the week ending the 11th of July, we can see the candles are getting smaller. Derivative oscillator continuing to move up. Price percent oscillator going up on the 2-day chart, but not at the stronger pace it had been on those 4 days prior, those two-day candles. It slackened a bit. Now, and again, but still a green open box candle. But again, price is hitting about where it was before, topping out at about 281. So again, are things slowing down? Down for the day, 0.37%. We get to the 4-hour chart. That's where you really reflect it. And you see that topping out there, again, around 181. Sorry, I always do that on SPY. I always say 1 instead of 2. 281 instead, that's where it is topping out. Had a red candle down in the morning, solid box, and then a green spinning top in the afternoon, and a crossover on that 4-hour chart going down. Now, this may be an opportunity if you've not been in already, and it's tough to find a jumping in point. Movement went up, 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 never a crossover going down on that 2-day, that 4-hour chart. Let's just check out the 2-hour. Well, you had it cross over going down, and it never crossed back over going up. So again, the 2-hour chart didn't work for you either. If you wanted to use that, we really haven't had a pullback. This is the first time. We'll see how strong the pullback is. Looks like the derivative oscillator, well, it's still in the green. Price percent oscillator did cross over going down in the afternoon. We'll see if things pop back over going up. While the 2-day and the weekly are still in confirmed up moves, you might have a chance to catch a little bit of this gain. That's where we are on the S&P 500. What about the Qs? Looking quite similar. Derivative oscillator, however, is losing momentum. It's actually heading down. Price percent oscillator heading up. We see, again, a green candle, only the second open box green candle, unlike the priors that you saw, I think is 4 or 5 on the S&P. The Qs has not been going up as strongly, but of course price movement is well above the weekly trend line, and it's just above the 2-day trend line. As we go from the weekly chart to the 2-day, what do we see? Well, again, smaller candle than the prior weeks. It looks like the price percent oscillator is just about gone flat. Derivative oscillator still gaining momentum. And again, for the day, down 0.47%. We can really see that topping reflected as things slid sideways for the last 2.5 days or so, down in the morning and in the afternoon. Actually, the crossover occurred at the close of the morning candle on Thursday, and we saw that was on the price percent oscillator. We saw the derivative oscillator flip to negative in the afternoon. So 2 red down candles. Price movement still just above the 2-day trend line. This is a pullback that we've been waiting for. We'll look and see if we get a jumping in point, if it crosses back over going up, while the 2-day and the weekly are still in confirmed up moves. Remember, that's what we look for. We either have weekly vertical crossovers and jump in that following Monday, or we wait and wait to see both our 2-day and our weekly moving in the same direction, pull back on the 4-hour chart. Then when it rotates over in the same direction, that's when we pull the trigger and jump in. So we'll see if that second type of trading opportunity presents itself. That's where we are on our 2 stock indexes. Back to the weekly chart, we move on to 20-year bonds in a confirmed up move on the 2-day and the weekly. This week is the weakest week we've seen in the last 4 weeks. Well, there were 4 prior weeks of up movement. We have both the 2-day and the weekly in confirmed up moves. This is a red spinning open box top. Now, it's not a strong red solid down candle. It's just showing some inherent weakness. We've broken through the 2-day trend line on that weekly chart, still above the weekly trend line. Derivative oscillators losing momentum for the week. Price percent oscillator still heading up, but not as strongly as the prior week. We look at the 2-day chart. What do we see? You can really see 2 candles of down movement, 2 solid red down candles. Again, this latest one is a spinning top, means indecision, but tending down, and it is pushed through the 2-day trend line, still above the weekly. See the price percent oscillator heading down, derivative oscillator losing momentum. Again, it was an up day, though. What do we see on the 4-hour chart? Well, we see it moving up in the morning and even more strongly in the afternoon. Derivative oscillator still negative. Price percent oscillator has not crossed over going up. But if this up movement continues, watch for it in the morning. If there is a crossover by the close of the morning candle, might give you an opportunity to jump into an up move. Why? Because the weekly and the 2-day are still in confirmed up moves. This might be just a pullback instead of a route down. So if it does cross back over going up, might have an opportunity to do a trade, a practice trade on TLT 20-year bonds. That's where we are on bonds. Now, lastly, as we always do, we go to gold. Gold's been in a confirmed down move, well, in earnest, since it really started heading down on the week ending the 27th of April. We've only had 3 up weeks in all that time. Price movement still well below the weekly trend line. Derivative oscillator gaining momentum. Price percent oscillator heading down on that weekly chart. We go to the 2-day chart. What do we see? We see, again, price movement below the 2-day and the weekly. Derivative oscillator, which had been losing downward momentum, started gaining it on the 2-day candle ending Tuesday the 17th. It gained more on the 2-day candle ending on Thursday the 19th, and it's a nice big red down candle. Those of you who've been in that down move going quite nicely still. And as we go from the 2-day to the 4-hour, what do we see? Well, we see things still heading down. Remember, our jumping in point occurred after that crossover on the 4-hour chart going down back on Friday the 13th, and it has continued to be down moves quite nicely. Now, the latest 4-hour we saw the morning on Thursday, strong down movement, a little bit of a recovery in the afternoon. Still, gold finished the day down 0.43%. Keep your eye on this green spinning top, means indecision, tending up, and we see that the price percent oscillator has gone flat. So just keep your eye on things. If this 4-hour chart crosses back over going up, then of course you'd want to take a decent down move. Hell, it's about $2. It's been quite sweet. You'll definitely want to capitalize on that short position and take your profit in your virtual trade. Remember, we always say virtual trades because we're not a stock calling service. We're an education firm. We don't give market advice. We want you to practice with us. Get good. Practice on your daily market worksheets, weekly market worksheets, your trade worksheets. Fill all those out. PDFs for those are available, of course, at our website under the daily postings that we put up. You'll also find them at our YouTube channel. And of course, you can purchase from us our Trader's Journal, which incorporates all of those in a bound 3-month version. And you'll find those links, of course, under the show notes. My friends, thank you so much for being with us. As always, let us hear from you. chartingwealth1@gmail.com is a way you can reach out to us. That's the number 1, chartingwealth1@gmail.com. God bless. All the best from the whole team here at Charting Wealth World Headquarters.